Well, one of the points that I just mentioned and that you've highlighted in your report is carbon pricing as a shift to decarbonisation. But, give me a sense of when this is actually going to happen in a meaningful context. Because, even private corporations have been saying for years and years and years, when the governments decide that carbon pricing is relevant, then we are happy to go with it. And in fact, we would like that because it would give us a greater degree of certainty and planning capacity to be able to factor this kind of policy thinking into our activities. But it's never come. I mean, this has never taken root. So what is it going to take now?
Oh, look, I disagree with that. I think, what we saw at COP26 was a really, really important catalyst. So one of the key things that came out of that was resolution over basically this thing called Article 6.4, which basically resolves some of the disputes around the different carbon offsets out there in the voluntary markets. We've also had China's, ETS launch, which overnight becomes the largest by emissions trading scheme in the world. So we're reaching around 25% coverage in carbon markets of global emissions. My view of 2022, I guess, is that, we're going to see carbon prices increasing. We've already seen that in the EU ETS. And that, for me, that's driven by fundamentals. It's driven by, a permanent shift in, if you like, the carbon equation, where, ultimately we're moving to a multi-decade period where supply of carbon needs to come down versus demand, and that that's secular, and it's going to drive a cascading number of different industry structural shifts, basically.
Look, there's long been a big gap between what the governments have been saying in these international fora and at these great meetings and what they actually do. We still do not have a carbon pricing mechanism. We still do not have a price for carbon that actually reflects a meaningful impact.
Yeah, no, again, see, I would disagree because, if we just look at, let's just take China. We're already seeing it in Europe, but I think what's probably more interesting on a go-forward basis is China. Obviously, the ETS has been launched, but actually only a month or so ago, there was an announcement indicating that China's going to lower its allowances much, much earlier than expected. And that will drive carbon prices in China. It will be a managed process and transition, and there'll be support for businesses. But in a country like that, I think that's pretty telling. It also speaks to a number of interesting investment opportunities. But I think, take a step back. We've got the EU ETS, we've got the EU's carbon border adjustment mechanism just being approved effectively, a tentative agreement with the US. So effectively, you've got the US signing up to a carbon border adjustment mechanism. You've got China with an ETS. You've got a trifecta there, which in my view ultimately is going to lead to a global carbon price. So, yeah, not quite on the same page on that one.